Hello, everyone. This is Adam Halpern. I'm the president of Indicator Warehouse, and I have Eric Semp with me on the phone today. He's our lead trainer and trade room moderator. The objective for today is to just give you an overview of what sets the Raptor trading system and Indicator Warehouse apart from the other vendors and systems that are out there. You're more than welcome to ask any questions along the way, and we're here to help. All right, Eric, I'll hand it off to you.
Thanks, Adam. Welcome, everyone. What we'll do first is we'll do a real quick overview, show you what's new about the Raptor, and then I'll go into some of the specifics of the trading system in a little bit more detail. So this is the Raptor trading system. There's several things that makes the Raptor very unique. First off, the bars themselves are the Indicator Warehouse mean Renko bars. So these are not your typical range style bars. These are not time-based charts. These are actually a Renko derivative. Why is that important, you say? Well, the Renko bars are extremely powerful at showing you support and resistance areas. They work really well to show you who is in control of the market. You can see quite plainly that there was some price resistance here, more price resistance here, support here, higher support here. You know, the market continues to make higher support, higher resistance. So it's pretty obvious at this point that the buyers are in control of the market. The mean Renko bars have the added advantage of also having a sensitivity factor built into them. So they've actually combined the best of both worlds. They've taken the range power of a Renko bar that shows you who is controlling the market, and they've combined that with the sensitivity of a candlestick. So you'll notice that some of these bars have got wicks or tails to them. Again, that gives you a little extra information about what's going on in the marketplace at this time. Yes, people often ask, can we change the bar colors? Yes, you can change the bar colors here. The blue in the mean Renko bar is a more bullish market. The yellow bars tend to portray a neutral market, and then when the bars turn the magenta color, then the market is considered to be more bearish. So the bars will paint according to the current market condition, whether the Raptor considers the market to be more bullish, neutral, or more bearish. You'll also notice that we have this double cloud printing here on the Raptor. No, it is not an Ichimoku cloud. Yes, I know it looks like one, but it's not. And this cloud here gives us our directional bias. So when the cloud is stacked this way, we're going to look for buying signals. When it's stacked the opposite direction, we're going to be more interested in sell signals. Now, the hard edge of the trading band, that's this highlighted portion, is also very important to us because it's an area of extreme price sensitivity. Whenever the market encounters the hard edge, we expect some sort of reaction, and that very often leads to a decent signal. In fact, right now you can see that one of our high probability signals have printed here. You've no doubt already spotted that the Raptor is producing these numbered signals, and what those are the high probability signals in the new Raptor 2.0. That's really what makes the Raptor unique from the other trading systems, is that it helps you identify the highest probability trades, the highest probability entry signals as they develop. And it does this in a couple of ways. First off, when the trade is first printing, you're going to get a warning dot along with an audio alert. That tells you that the trade parameters are starting to be met and that maybe you should start to pay attention to this market. You're also going to get a pre-signal warning in the top right corner, and I'm going to show you all this in a moment. And then when the signal parameters have all been met, you're going to get a triangle and a hash mark along with a numbered code to tell you what trade it is that we're anticipating. All right, this is probably a good time to go to the slides. Hold on a second here, and I will show you this in a little bit more detail. So on this slide, you can see what I was talking about. We have the early warning. We've got the warning dots. We've got the audio alert. We have the pre-signal printing in the top right corner of your chart, telling us that a crossover buy signal is forming. This is one of our high probability signals. The crossover buy signal tends to develop at the beginning of a trend. Once the signal is engaged, you can see that there's usually a reasonable amount of follow-through there, at least enough to get to our high probability profit objective. That's the number one signal. We have three signals. The second signal is actually a counter-trend signal. So the Raptor is sensitive enough not only to pick up emerging trends, but also to alert you when the trend might be reversing. That's the number two signal. Now here we also get the audio alerts, we get the warning dots, and we'll get the pre-signal printing in the top right corner of your chart to let you know that you may be looking at a reversal trade, giving you plenty of time to set up and take that trade. You're never rushed with the Raptor trading system. And then once that signal completes, of course, we see a little bit more follow-through on there as well. Again, usually enough to at least find our high probability profit target, but very often the market will move much further. Our third signal is the hard edge bounce. I was just mentioning to you, whenever the market encounters the hard edge of the trading band, because that's an area of special sensitivity, we can anticipate some sort of reaction. Again, you'll get the warning dot. Again, you'll get the audio alert. You will also get the pre-signal printing on the top right corner of your screen to alert you to the possibility of a high probability trade. And then once the signal engages, again, we'll get a reasonable amount of follow-through. So let's just take a look here again at some of the charts, and you'll see how some of these things develop. This is our number one signal telling us that the pullback phase is over. We've got a cloud crossover signal, and the market fell off nicely. From there, prices retreated back into the cloud, but the cloud pushed the market back out, thereby producing a number three signal after it encountered the hard edge, and again, a signal that you could take with a great deal of confidence. One thing you're going to find about the Raptor is that it will focus on quality of signals over quantity of signals. And before you think, oh dear, I'll never be able to make a living trading just one signal a day, I think it's very important for you to recognize that trading is not like working a production line. More trades does not equate to more money. In fact, trading more often, very often has the exact opposite effect on your account. You will find that you will do better if you trade less often. However, when you get that high probability signal, that you capitalize on it correctly. That's where this tool here in your right margin comes in.
Eric, let me interrupt real quick. I just want to give a little bit of background because I know we have newbies on the phone, and then we'll definitely dive into Trade Manager. For me, quality trading software, that's just the price of admission. We don't claim to have, some secret entry point that nobody else has. That's silly. It doesn't exist. But what we do claim to have, and what we've painstakingly put a lot of effort into, is designing software tools that make trading easier to do. And that's really what software's job is if you think about it, right? I mean, a word processor doesn't write the novel for you. However, if you're a writer, it sure makes writing that book easier and quicker. As a software vendor, that's always been the driving force for us in Indicator Warehouse. So what you see on the surface may look rather simple. what's going on behind the scenes is extremely complex, and that's by design. And so originally, when we first came out with this diversified trading concept, we took a portfolio management approach, which is using different assets in your portfolio at the same time, and we applied it to day trading. And so the original DTS system had 3 separate systems running at the same time, one designed for scalping, one for range-bound trading, and one for trend trading. The idea was that no matter what condition the market was in, we had a system available to you to trade with. Raptor evolved out of feedback from our customer base because people wanted, quite frankly, a simpler way to trade. And so we moved from having a 3-screen trading system to a 1, but we did not want to sacrifice a diversified approach. And so what you see here in the Raptor is actually quite elegant from a coding perspective. Each of the visual elements you see on the screen are actually powered by a separate trading system. And so the filter bar you see at the bottom, the magenta and blue bar at the bottom, that is an entire trend trading system that powers that visual element. The paint bars that you see, that are the mean wrinkle bars, those are powered by the scalping system, all the math behind that. And then the alerts that you see are powered by the range-bound system. So we took all that diversified trading and we integrated it into one single trading system. Now, what makes Raptor 2.0 unique is that for the last 2 years, when Eric's been running the training room, he's been describing these setups, and they're in the manual, and this is what people have learned and been very successful with. But people want to take out as much subjectivity as possible. So we went back to the drawing board about a year ago and said, all right, Eric, we've proven that these 3 particular trade setups have the highest probability. Can we codify them so that instead of you just teaching them visually to be seen, they actually appear on the chart as those 1, 2s, and 3s? That's what you see there. However, you'll also see some other visual elements. So you'll see the little dot next to a signal, and then you'll see a triangle, and then a hash mark. Those are the original Raptor 1 signals, still 100% valid. However, they're not as high probability as the 1, 2, 3 boxes you see on the chart. And this is important because I believe that our trading system should evolve with the trader. If you're absolutely new to trading, you definitely want to concentrate on the 1, 2, 3s. As you become more evolved as a trader and become more advanced, you can then start taking advantage of these other signals that are on the screen. We do have people that are more advanced, and they may take those signals because they're more comfortable trading now that they understand the system better. And that's a perfect segue to moving beyond just the entry signal, which is only a piece of the equation. The other part that really set us apart in the retail world is bringing this trade manager software that Eric's about to talk about to the retail market, because up until Trade Manager appeared in the marketplace, it was primarily something you only heard about on the institutional side. So with that, I'm going to hand it back over to Eric and let him explain what Trade Manager is all about.
Thanks, Adam. All right, so what the Trade Manager does is it does 2 things for you. First off, it keeps you from overexposing yourself in the market. It controls your capital, and it does so by limiting your risk to this value right here. So currently, by default, I have it set at 2% of my trading capital. Generally speaking, 5% or less is considered prudent. Obviously, if you're trading a very large account, you don't need to risk anywhere near 2%. If you're trading a smaller account, you're probably going to routinely risk 3, 4, maybe even 5% of your capital. The point is that you cap your risk. The other thing the Trade Manager does for you by capping your risk is it will also maximize your profitability. It will maximize the number of contracts that you are able to take relative to your risk. Now note the risk amount here is $400 approximately. And right now I can afford to trade 3 contracts. If I change the stop loss, and let's put our stop loss down here, note the risk amount doesn't change. The risk amount is still $400. But what has changed is my exposure to the market. Instead of trading 3 contracts, I'm only trading a single contract. The other thing that has changed is the probability of my trade. You know, every time you take a trade, it's essentially a 50-50 proposition. You're either going to make money or you're going to lose money. What I see a lot of traders do incorrectly is they jam their stops in ultra tight because they're afraid they're going to lose money. Well, I can guarantee you one thing. If you place your stops very, very tight, you are going to get stopped out more often than not. You are going to realize your fear, and you're going to get stopped out. Using the trade manager and using the risk percent mode to contain your risk, this will always be an amount that you can afford to lose. Now, you know, based on my account, losing $400 isn't going to put a real dent in the account. You know, think of it this way. If you're trading a $100,000 account, 2% of $100,000 might be $2,000. It's a large amount, but it's hardly going to put a dent in a $100,000 account, right? You're still going to have $98,000 to trade with. Is the loss unpleasant? Yes, but is it a loss you can afford? Absolutely. And this is what so many traders do incorrectly, and then they wonder why they can't make money trading. Now, the trade manager also enables you to preset as many as 3 profit targets. Currently, I have my profit set at a 50-50 split. Half my position will be taken on target, and I've preset my targets. You can also click for your targets. So let's say I wanted to set it up like this, and I want to have my first profit objective right there. You can do that as well. Or you can have them all automated so that they set up however you would like. The trade manager also has a manual mode, which will default to this quantity right here. So a lot of times, if we're looking at a counter trend signal, because it's counter trend, I don't necessarily want to go in too heavy, so very often I'll switch from the risk percent mode to the manual mode, and I'll just take a single contract. That way, again, I'm limiting my risk exposure. Given the nature of the trade, maybe I don't want to go in too heavy, and it's just a very easy way to control that. A trade manager also has 4 different entry parameters for you to choose from, and very important, we also have the profit manager component of risk manager. This is an assortment of 16 different stop strategies for you to choose from. Each stop strategy is fully customizable, and it's represented by these blue dots that you see. So you can make the stops a little bit more liberal. You can make them a little bit tighter if you want. Whatever you choose, you can adjust all the parameters on each of the different stop strategies. What Trade Manager will do is once your trade is enabled, once your trade goes live, it will automatically roll your stops according to this stop strategy, which means that your trade is now essentially automated, which means that you can go look for other trading opportunities. You don't have to babysit this trade any longer. You can also change the stop strategies on the fly. If you look at this trade and you say, well, it looks like I've got about $200 in open profit right now. I don't want to let that extra open profit get away. I'm going to go with a more aggressive stop strategy. Go ahead, you can do that too. Maybe switch to something like the parabolics, and it will roll the stops a little bit tighter, and you'll be able to capture more of that open profit if that is your choosing. If you choose to perhaps try to hang in for the larger move, you can go with something a little bit more conservative, maybe something like the chandelier stop strategy, and just try to ride out that run and see how far you can go with it. All right, so again, lots of different stop strategies. It does very important things for you Namely, it controls your risk as well as maximizing your earnings. And it's the exact opposite of what most traders do. Most traders do not control their risk. They risk far more than they can afford to lose. And they end up not maximizing their profitability. You know, you've all heard that trading expression, cut your losses short, let your profits run. Great idea, great suggestion. Too bad nobody ever tells you how to do it. Right? Everybody leaves it up to the trader's own discretion, and what ends up happening is traders will run their stops super, super tight in a hope that, you know, the market, they'll catch one of these big moves. And today was a big moving market, to be sure. We saw a very strong uptrend in the NASDAQ. But at the same time, you need to cap your risk. Here's a quick little example. I run into this all the time when I'm coaching people. You know, I'll tell them about capping their risk to a certain percentage, and they'll look at a trade like this, and I would probably set up the trade this way. They'll say, okay, Eric, you know, I wouldn't do a trade that way. You're going to lose $400. And again, that's only 2% of my capital. For you, it might be more, it might be less. But look at this. If I chose to run my trade like this, like most big traders do, they'll say, oh, well, I'm only risking $50. Yes, okay, you're only risking $50. If you lose on the trade, you only lose $50. But here's the flip side. You only make $100 on the trade. If I go with my, we'll say we're going to be all in, all out on this trade, you may make $100, but here's the exact same trade. I've made $300. I've made 3 times as much money as you have. You need to try to find 3 more trades just to catch up with my one trade. And the whole time, I have not lost more than I can afford to lose. This whole concept, it's unique. It's probably not something that you've heard much about before. I call it the best kept secret on Wall Street because nobody's talking about it. You go to any chat room, any trading forum, everybody's talking about an entry signal. Entry signal, entry signal, entry signal. As if that is going to eliminate your losing trades. As a trader, you will never ever eliminate all your losing trades. It's impossible. So what you need to do is you need to protect yourself. And you do that by not strangling your trades. Don't bring your stops in so tight the trade doesn't even have a chance. Give yourself a reasonable stop. Control your risk by controlling your exposure to the market, not by keeping your stop ultra, ultra tight.
Eric, can I step in for a sec?
Yes, sir.
Okay, so remember how I said, you know, a good entry signal is the price of admission for being in this business? It's something like Trade Manager that really sets our system apart. And the thing about Trade Manager is it's not sexy. It's actually quite boring, and so it doesn't market well. But it is by far the tool that I get a phone call most often 2-3 months after a customer's purchased our system, and they're like, why didn't I know about this 5 years ago? And partially it's because it didn't exist in the retail market. And again, it's not sexy. Everybody wants to talk about their entry signals and, you know, their accuracy and all that BS, when in truth, trading should be quite boring. It's about capital preservation. It's about protecting your account so that you are around to take advantage of the runners. And when you do take advantage of the runners, you're capitalized correctly. So the idea of going into a trade already knowing that there's a fixed risk, you never risk more than a fixed amount of your account, gives you a tremendous amount of confidence. As Eric showed, depending on where you put your stop, you'll never risk more than a fixed amount. However, you may be able to buy more than one contract without putting more money at risk. And I can't tell you how many prospective customers I talk to who all have the same strategy. See if it sounds like you. I'm going to use one contract to build my account, and then eventually, when my account's big enough, I'll add a second contract. And it sounds like it makes sense, but in fact, you're not allowing yourself to trade effectively because you don't have multiple contracts to work with. And so if this flies in the face of what probably 90% of the stuff you've heard out in the market, that's a good sign, because we all know that 90+% of the people that are in this game fail. Well, why is that? Because they all trade the same way. And so what I invite you to do is think about what the 10% are doing. How are people trading differently than all the sheep that are out there that are getting basically shorn? It's important because if you end up trading the same way as 90% of the people that are out there, why would you expect to have any outcome than what most of those 90% have? I put a link in there in the question and answer box. Eric does a much better job of explaining this than I ever will, but we did a really good presentation showing the value of proper money management. And we also created an online calculator where you can do what-if scenarios and see the impact of this risk management approach on a typical trading account. If you had traded it with just the typical one contract at a time versus being able to trade with multiple contracts but still not risking more than a fixed amount. It's really worth some time to go in and use that calculator and see the impact of this position sizing. Okay, I will hand that back to you, Eric.
All right, Adam. I was just going to review some of the signals today for everybody. Like Adam said, trading is so much more than just the signal. I guarantee you that at Goldman Sachs, nobody is hanging around their chart right now saying, does that look like a bullish Harami pattern to you? No, they're not doing that. And neither should you. And you're not really going to make any money or any serious money just being a onesie-twosie trader. Yes, we all need to start somewhere, but before you blow up your account because you're risking more than you can afford to lose, do yourself a favor and take these things to heart. Cap your risk at an amount that you can afford. Here's the E-mini S&P from this morning. You can see here in the overnight session during the London Open, we had a reversal signal. There's our number 2 signal. And that kind of teed things up for today. Around the North American Open, about the same time we were getting that NASDAQ signal, we got our number 1 signal. And here's a pretty good example of why you don't want to strangle your trades. Like, let's say we place our stop back here. The market gives us a little bit of heat. It didn't quite get to our profit objective. Gives us a little bit of pullback. Now at this phase, because if we had placed our stop right here, ultra tight like traders normally do, we would have been stopped out already for a loss. Now if you had gone with the full capitalization, you would have been stopped out for a $300 loss right there. If you had taken a smaller, just a single contract, you would have been stopped out for the $70, $80. All right? But here's the point. This stop loss is not a loss until it gets hit. Theoretically, if you keep your stops far enough away, every single trade can be a profitable trade. There's an inverse relationship between your profit target and your stop loss. The tighter your stop loss, the less likely you are to be profitable. The looser your stop loss, the more likely you are to be profitable. And again, that kind of flies in the face of convention because everybody is always talking about risk-reward ratios and how you need to have at least 3 times the risk or 2 times the risk relative to your reward. Well, how do you know? How do you know what your reward will be? You don't. Sure, you can speculate. We all speculate. But you don't know where the market is going. You don't know if this next bar will be higher or lower. If you did, you wouldn't be here with me. The fact of the matter is that as traders, we need to set up trades that skew the probabilities in our favor. How do we do that? Well, we use high probability profit targets. We use reasonable stops. Now, just because my stop started here doesn't mean it has to stay there, right? I can now now that the market's recommitted to my trade, and I'm actually producing a number 3 signal, kind of reinforcing that the market should go higher from here, I can roll my stops up. So now instead of having $300 at risk or 2% of my capital, I have less than 1% of my capital at risk. Do I want to take a loss on the trade? No, absolutely not. But losing 1% of my capital is not the kind of trade that's going to have a significant impact on my account. Even if I'm trading a $10,000 account and I lose $100 on the trade, that's not going to put a serious dent in my capital. If I'm trading a $10,000 account and I lose $700, $800, $1,000, those are the kinds of trades that are going to cut your trading career short. And, it's so new to so many people. They have a difficult time with the concept, but it is so important to your trading success. I cannot overemphasize it. So that's pretty much the Raptor trading system in a nutshell. All right, Adam, if you don't have anything else to address on this screen, I'm going to show the folks the slide with the link.
So everything I'm about to tell you, by the way, is already covered in that link that you see on the slide. If you don't want to listen to me talk now, you don't have to. You can just go to that link. The last piece, when I advise someone to be doing due diligence for choosing a vendor to be working with, is the company itself. And here's what I mean by that. We've covered the fact that there's quality software available from us, accurate, simple, easy to use. The emphasis on account protection and automated trade management. And then finally, just having a real company behind you. Sure, there's 500 plus partners in the NinjaTrader space. About 495 of them are Tony Ponytails that threw up a website and a couple of indicators and said, hey, we're an indicator business. There are a few of us at the top that are running real companies. Software company, that means support staff, that means programmers, that means listening to our customers and continue updating and improving our product line. That's a real company. And that's what Indicator Warehouse has been since the beginning and continues to be. And so that's why you see an evolution of our products over time, continuing to make it more accurate, simpler, and easier to use. But here's where we now really set ourselves apart from everybody else, and this has to do with our business policies. One, you get Eric as part of your investment into our system. And what I mean by that is, if you haven't noticed already, Eric's a gifted teacher and mentor. Every morning, Monday through Friday, we have a live trade room in which people who have invested in the system have the opportunity to learn how to actually use those tools. Right? And it's ridiculous to have a trade room that's just a pure call trade room. I don't understand the value of that. That's what I call monkey see, monkey do trading. I'm assuming that you're on this call or you're involved in day trading because you wanted to be an independent, self-directed trader and not have to suck off the teat of the company for the rest of your life. That's why we did not put together a model in which we have an ongoing fee for our trade room. For me, that creates a conflict of interest. Once you invest in our system, you get the trade room for life. Typically, most people are in it for about the first 3 months, and then they get it, and they go out on their own, and they do their thing. And then, like all things in education, they're ready for more advanced concepts. They come back, no charge, move on to more advanced concepts, move in, move out. That's the beauty of a model like that. So that's free for life. Any kind of software updates, upgrades, whatever it may be, also free for life. Unlimited email support, free for life. That's both tech support and trading-related questions. And then for the first time ever, we're actually doing a money-back guarantee on this system because that's how strongly we feel about it. I've tried to remove any obstacle there is to you working with us here at Indicator Warehouse. That said, I'm completely available to you. If you want to talk to me personally before you make a commitment, I'm going to put my link here in the window, and you can schedule a call. I'm more than happy to talk with you. So, again, quality, clean, easy-to-use software, account protection, quality education, ongoing support. Those are the things that I want you to be able to take away from today's presentation. That said, are there any other questions just that you have while you have me and Eric on the line?
I think, Adam, we should address Bill's question. But Bill was asking, does the Raptor system work on the Forex markets? And the answer is yes. It works on Forex. It will work on stocks. It will work on ETFs. Actually, any chart that you can plot on NinjaTrader, the Raptor system will produce signals for you.
Great point, and I guess implicit in that, but I will make it explicit, you do need to have NinjaTrader as your trading platform in order to take advantage of our software. And that's simply because NinjaTrader is the only platform that was sophisticated enough to handle the kinds of software that you see here today, particularly the Trade Manager and the mean wrinkle bars. We can help you get up and running on that if you wish. One of the nice things about NinjaTrader is you can get a copy of their trading platform software for free, and you can use it for free as long as you want while you are sim trading or paper trading. It's only once you want to go live that you need to start paying for their license. Any other questions besides that? Someone's asking about brokerages. In the NinjaTrader world, it's more limited than it used to be as of about 2 or 3 years ago. NinjaTrader itself became a brokerage firm. There's also interactive brokers. On the equity side, I believe that MB Trading is still a big one for that. That's something you really want to talk to NinjaTrader, proper about, but there are still definitely choices for that. Someone's asking if we have any trials. No, and that's no longer necessary because we have a money-back guarantee. And again, don't rush into this. Do your due diligence. Go over to our YouTube channel. See if you like the way Eric teaches. And go look at our competition, please. I love having an informed customer much more than somebody who just comes in all, cowboy gung-ho and gets one losing trade and, the next day they want their money back. No, I like informed customers, people who can truly appreciate the amount of time, effort, and intelligence that's gone into what we have to offer. That's why I'm available. You want to talk to me on the phone or Eric, just let us know. Again, I'm more about having an informed customer who's on board for the long term than somebody looking for a quick hit.
Adam, let me just interject here just really quick. I think what makes the whole Raptor system so powerful is that, as you pointed out, it addresses all the elements that you need to be a successful trader. You've got your entry system, you've got the way to manage your trade once you're in a trade, and you have your all-important money management. I always equate it to the 3 legs of a stool. And it gives you a very stable, safe place to trade from. You're no longer trading from a position of fear. You're actually trading from a position of control. And just that concept alone is going to elevate you to the upper echelons of the trading world. So many retail traders are like dartboard traders. They throw the dart, okay, it hit the buy, I'm going to buy, it hit the sell, I'm going to sell. They don't know. But the Raptor system gives you a way to look at the markets that you can say, okay, here's a buying opportunity, I can take it, this is how I'm going to manage it, and this is how much money I'm going to have in risk. And you know everything from the outset. You're totally professional in the way you're running your business now. And like I said, you're no longer trading from a position of fear. You're trading from a position of control. And I think that makes all the difference. I truly do. I know it made a difference in my own trading when I left that mindset of fear and always afraid, I'm going to lose on this trade and, I can't afford to lose that. And you can adjust the amount. You saw the amounts here were $400. If you're not comfortable with that, dial it down. Dial it down to 1%. Risk 100, risk 150, whatever amount you're comfortable with, you can do that. And again, it allows you to trade from a position of control, make rational decisions, not make decisions because all of a sudden you're afraid because the market moved against you a couple of ticks. And I think that's the true strength of the Raptor trading system, is that it addresses all your needs as a trader.
You know, it's funny. Eric is he's always so humble, which I know is odd in the day trading space, right? Typically, there's a lot of egos involved here. I would say we're not a three-legged stool. I would say we're a four-legged chair, and that fourth leg is the education, namely Eric. And so I do want to clarify this because we use the term trade room, and that means a lot of things to a lot of different people. When I talk about our trade room, it is a training, T-R-A-I-N, environment done during live market hours. And again, that's because we feel obligated that if you're going to make a significant investment in the software up front, you deserve to learn how to use it as quickly as possible. The other thing that's unique about that training room is that Eric will do things or show things in there that you typically wouldn't see in a trade room. And here's what I mean by that. He may show a bad trade on purpose. And you're like, well, why would you do that? Well, it's one thing to get in the boxing ring and say, hey, if you do this, you're going to get hit in the face. It's another thing to get in the ring and actually feel what it feels like and still survive it, get up and keep going. Because as Eric said, you're going to have losing trades in trading. You need to get used to it. Just like when you get in the boxing ring, you're going to get hit. You just got to push through it and keep going. And so Eric may say, look, typically I wouldn't take this trade. Let me show you why. And go ahead and take it and demonstrate why everything looked correct, but you still wouldn't take it. And that happens, all right? I mean, yes, we have high probability software, and yes, a lot of thought has gone into it, but at the end of the day, it's mathematics, and that's why protecting your trading account is so important. But Indicator Warehouse is really a response to everything that I didn't have when I was trying to trade. And the biggest thing that I was missing as I sat alone in my home office with my 12 monitors is that I would be using a system, do everything according to the rules, and the market would still turn against me, as it happens. What I didn't have was someone like Eric at my back going, hey, you did everything right. And so just keep pushing through. Well, if you don't have someone like Eric at your back giving you that kind of information, you really only have two choices when you have a losing trade. You either blame yourself or you blame the software. Well, I don't know anyone who ever blames themselves, so typically it's blaming the software, and that's usually where the system hopping begins, and $10,000 to $20,000 later, you're still in the same spot because you didn't have a comprehensive solution backing you up when you're trying to trade. And so that's what we've tried to do here. I will bring this up in case you miss it during the video that you watch about the offer. We will also install everything for you. If you commit to the investment, then our job is to get you up and running as quickly as possible to make sure that you have all the software, all the education, and all the support necessary to succeed as a day trader. Or as we say in our tagline, everything you need to succeed under one roof. All right, so with that, I want to thank you all for joining us today. I'm assuming a fair number of you will actually be listening to the recording of this after the fact. That's great. I look forward to hearing from you. If you decide to commit to an investment now, you can be up within 24 hours and on your way. So thanks so much for joining us today, and Eric and I will catch you on the flip side.